A corporation is a legal entity that is separate from its owners. Let's break down how this structure impacts business and taxes. At its core, a corporation is treated by the law as an artificial person. It can sign contracts, own property, and even pay taxes. One major benefit is limited liability. This protects the personal assets of shareholders if the business faces a lawsuit or bankruptcy. Corporations have a distinct structure. They are owned by shareholders but run by a board of directors, meaning the business lives on regardless of ownership. Compared to a sole proprietorship, a corporation offers more protection but requires more paperwork and often faces double taxation on profits. Corporations are also easier to scale. Selling shares of stock allows owners to raise capital and transfer ownership much more efficiently than other entities. Remember that maintaining these protections requires keeping business and personal finances strictly separate at all times. Understanding business structures is key to financial literacy. Check back for more basics on taxes and investing. Thanks for watching.